Good morning, Steve Free in Chicago with the morning grain comments. Well, overnight we have a mixed trade with beans down and corn and wheat up. Yesterday we had a pretty sharp rally in corn and wheat and liquidation of some long soybean and short corn positions. Funds were massive buyers of corn and wheat, and the question is today, will they continue to cover their shorts in corn? Some people attribute the buying to the ridge of high pressure that's going to be across the Midwest next week. Most crop people feel that it will not hurt the U.S. corn crop or the hard red winter wheat crop, since we're going to start harvest in central Oklahoma this weekend. But the market could put additional premium on the prices, especially since corn is trading for the first time since January over the 50-day moving average. As far as weather is concerned, as we mentioned, warm and dry next week across the Midwest. The extended outlook suggests that this ridge will retrogress and that we'll get back into some kind of normal pattern, especially in the north and eastern Midwest. Southern Plains is expected to remain dry. In Europe, we have dryness in the west and in the east. We've seen Eastern Europe weather improve, just like most of Russia. Today's maps add a little more rain for France and Germany, but they may be overdoing it. And then we see in the new lands in Russia where spring wheat is grown, there is a drier forecast. So beans are sitting at the midpoint of what possibly could be a trading range. The most important thing for them today is the president's press conference and U.S. reaction to China taking over Hong Kong. We also, in the corn market, we would expect that farmers have a lot of inventory to sell. So any further rally over this 50-day moving average could be met with farmers selling, which could stall any rally unless there's a weather problem. And in the wheat market, we're still concerned about global stocks being record high, and we're concerned about trade and just see if some of the normal buyers of wheat come in and buy wheat for their needs. That would help the market sustain where prices are. So again, 340 in July corn, we would say 875, 880 in July beans, and 530 in July wheat are very strong overhead resistance, giving the drop in demand, concerns about the virus, and concern with the virus impact on world economies. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.